What is the VIX and why does it predict market crashes? The stock market is about to crash and wealthy investors already know it. They're not selling their S&P 500 positions. They're not touching their Roth IRAs. They're doing something else entirely. And it all comes down to one number you've probably never heard of. The VIX. What if I told you there's a meter that measures investor fear the same way a thermometer measures fever? And right now, that meter is blinking red. I'm going to show you exactly what the VIX is, why it predicts crashes, and most importantly, how you can use it to protect the money sitting in your 401k and brokerage accounts. Stick around. Part 1, the VIX explained. Let's start simple. The VIX is the volatility index. It's literally a number that measures how scared investors are right now. That's it. That's the whole thing. Here's what's happening behind the scenes. Every single day, millions of investors are buying and selling options on the S&P 500. Options are basically bets on whether the market goes up or down. When investors are terrified, they buy protective bets, insurance policies on their portfolios. They're saying, I think the market's about to tank, so I'm buying a safety net. When a lot of people buy those protective bets at the same time, the price of those bets goes up. That price movement gets packaged into one single number, the VIX. When the VIX is low, like between 10 and 15, investors are chill. Nobody's panicking. Money's flowing into growth stocks. People are maxing out their Roth IRA contributions without losing sleep. When the VIX spikes to 25 or 30, investors are nervous. When it hits 40 or above, people are genuinely terrified. They're selling everything. They're moving money into cash. They're checking their portfolio value every 5 minutes. In March 2020, when COVID hit, the VIX spiked to 82. That was historic panic. People who had their entire retirement sitting in an S&P 500 index fund watched their accounts drop 30% in weeks. But here's the thing, and this is critical. The VIX hitting 82 meant the crash was already priced in. The recovery started just weeks later. Part 2, how the VIX predicts crashes. Now here's where it gets interesting. The VIX doesn't predict crashes. Let me say that again. The VIX doesn't predict crashes. It measures fear. But fear is usually right. Think about it this way. If you see a massive spike in the VIX, it means smart money is already moving. Institutional investors with millions in their 401 kiloseconds and pension funds are buying insurance. They're not guessing. They've got analysts, algorithms, and years of data telling them the market is stretched too far. When the VIX shot up in early 2018, the market dropped 20% within months. In late 2021, VIX started creeping up right before the 2022 bear market hit. In late 2023, the VIX was quiet. And guess what? The market rallied hard. That wasn't a coincidence. The VIX doesn't cause crashes. It's the canary in the coal mine. It's investors running toward the exits before the building catches fire. Part 3, what you should do about it. Here's the honest truth. You're probably not going to get rich trading the VIX itself. That's for sophisticated traders using options accounts on platforms like Robinhood or Fidelity. You'll likely lose money. Don't do that. But knowing about the VIX changes your strategy completely. If you're building a portfolio in your 401k or maxing out a Roth IRA, you need to know, when the VIX is low, that's when you should be aggressive. VIX at 12? Perfect time to go all in on growth stocks. VIX at 35? Time to be defensive. Add more bonds. Add more cash. Trim your exposure. The best investors in the world do the opposite of what scared investors do. When everyone's panicking and the VIX is screaming red, that's when you buy. That's when everything's on sale. Warren Buffett made billions doing this. Right now, check the VIX. Go to Yahoo Finance or your brokerage app. See that number? That tells you what the smartest money in the world thinks is about to happen. Use it. Don't ignore it. Call to action. The VIX is information. And information is money. Subscribe to this channel because every single week, we're breaking down financial indicators that Wall Street doesn't want you to understand. Your future self will thank you. Hit that subscribe button right now. Do it.